a lot of family and friends. That's what we look for. People we have really good relationships with, people that have some sort of interest in real estate or business, or they're passionate about the retirement or just learning. A big part of what we do with our meetup and letting people know what's out there.
If you're not conscious about your investment strategy, you won't end up where you want to be, not financially or as a human. On this show, we interview highly successful investors and share how they overcame limitations to become unstoppable forces of success. If you're ready to learn what it is to be a conscious investor so you can end up where you want, keep listening.
Welcome back, Conscious Investor. Have you been enjoying the episodes? I'll tell you what, the recent episodes, I love all the episodes, but recently I've been loving the cadence of the conversations and the mindset episodes. It has felt so great to be back in regular mindset episodes. Remember, I loved the Motivation Manifesto series, but really that was a long period of time. And so I'm really grateful to be able to speak to you on so many of the things that are at the top of my mind and impacting my life, oftentimes based upon the books I read. In fact, recently a friend asked, she's like, where do you come up with your questions that you ask people? And she's digging into it. And I just said, I'm constantly reading and reflecting, and everything that I contribute to you, Conscious Investor, really stems from what's going on, what I'm ingesting and how I'm internalizing it, and how I see that potentially serving you powerfully. So just some of the own excitement that I have. I wanted to also let you know that we have over 100,000 downloads, and that's because of you. So thank you again, Conscious Investor. That means you've been sharing, and I just want to thank you for the ratings, the reviews. That is, as you know, I say often, wind beneath my wings, to sound a little cheesy, but that's okay. But we know that this is truly impacting and reaching other investors like you who are looking to level up their life, people who understand that financial freedom is not the same as personal freedom. They're not equal, and they want a harmonious life. We'll put it that way. Lots of episodes on the difference between personal freedom and financial freedom. So if you're new, Conscious Investor, just go back a few episodes. You'll find it. Lots of gems. All right. Today, I am in the house with a friend. Now, this is the power of being part of masterminds, the power of going to live events. I cannot overemphasize the importance and power of going to live events. And now, Conscious Investor, I know you're like, Julie, I love my job. I don't want to become an active investor. I want to remain a passive investor, or I want to continue to grow in the passive investment space. But this is also important for you as a passive investor to go to live events, because then you meet people in the flesh and blood, and it solidifies a relationship, and it allows you to say like, whoa, no, this person, I really feel aligned with this person. We had coffee, or we met for lunch, and now you're feeling more connected. And because when you're placing those investments, let's be real, the first time you place an investment with a team, it can feel vulnerable. That's just the reality of it. I'm calling it straight. And so going to events and meeting with other active investors who you might invest with is really going to help allow you to understand them better and have that trust and that confidence as you are moving forward. So as you know, I recently had the honor of emceeing the Pay It Forward event. It was in April in Denver. There will be another Pay It Forward event next spring of 2024. You want to make sure you go to that event. It's fantastic. But that's where Colby and I finally had an opportunity to meet in person. And it's always just such a delight when you meet somebody in person. You're able to have conversation. And then we had follow-up conversation and some emails afterwards. And I'm like, gosh, we gotta have Colby on the show. So with all of that great introduction, Conscious Investor, I'd love to just welcome our friend Colby. Colby, welcome to the Conscious Investor.
Oh, thank you so much, Julian. Yeah, that was an awesome conference. You did a great job, and it was an intimate setting, and that's what really allowed us all to kind of meet and talk. And And I just appreciate your warmth and your personality. You're just so upbeat, and it was awesome.
Thank you.
Made it fun.
You know, you and I were talking off air about different events. I just returned back from the Real Estate Wealth Builders Conference, which is just like next level phenomenal event. And you've recently gone to a different conference, and we had some different experiences. Why don't we just share that? Because as we're talking about events and encouraging you, conscious investor, to go, not all events are equal. They will all serve you. They are all good. However, I had this deep connection with so many people at RubeCon, and you went to a different event. We don't have to name it if we don't want to. And what was your experience like?
Yeah, I think it was good overall. Great speakers, great content. Not the networking was really good too. I think, the type of people that you go to a conference to see, depending on where you're at, determines they're all great in one way or another. Some people might find one better in one way. Some people, for me, I think going forward, I'm looking for more networking and to be able to be out in the hall and talk to people. That's where the action is a lot of times. And so I love those kind of events where you could just stay out there the whole day if you want to. And then, but there's that value of getting that knowledge and sitting down there and listening to speakers. So I kind of like both, a good mix, but I absolutely prefer the former, some more networking. And I think, events where maybe more investors are present versus syndicators, or there's a huge mix of people like that sounded really good. The one you just went to, I think I'd definitely be open to that next year.
It was phenomenal. And so for passive investors, and Colby and I are going to have a conversation to support you, passive investor, Mr., Mrs., Miss, everybody, conscious investor. We're here to support you with that. And we're going to discuss that here in just a moment. I am going to chime in we were joking that we might just have LobbyCon, and like everybody just wants
that'd be good with me.
Everybody just wants to have, the conversations in the hallway. And so if we just call it LobbyCon and, sure, you can go inside there, but nothing's going on. You just want to be out in the lobbies with, your coffee stand or whatever.
And have to force you in there.
Yeah.
Time to see our next speaker. Get inside.
Yeah, exactly. So, I love serving passive investors because I know when Steve and I placed our first passive investment, and I'm on both the active, as conscious investor, active with 3 Keys investments, but then also passive with my husband. And I mean, it is solidified in my mind the moment I was still a public school teacher. And it was lunchtime. I get this phone call from Steve, and he's like, well, I hope it wasn't a scam. I hope that the money's gone. The money's there. It's all wired. And there was pressure to get that money wired in, which was really unique because this was with a syndicator that is extremely well known at this point, that was very well known at that time, but the syndications filled up very quickly. And they were just at that cusp of filling out their deals, in 48 hours type thing. And so we had to get that wire in, or we might not make it. And so it felt like, is this the right move? So a lot of the thinking that we had before we placed that investment is what we were relying on. It's like, well, it went really quickly once we made that decision. But we had a lot of decisions that we made leading into that allowed us to move with nimbleness. So I was just curious, what are some of the things that, you look for, or that passive investors that you work with as they are preparing is there like, even before that deal goes live, even before the deal hits their inbox, or for 3 Keys, we like to make phone calls and let people know, what is it that sets the stage so that people can say, yes, this is a deal for me?
Yeah, I think we're constantly doing that, reaching out by phone. That's the most important thing to our investors. We don't have a whole lot of, investors that come in just off social media and that kind of thing. We do a 506B typically offering, but we're constantly engaging all our network and letting them know what's going on, newsletter. And then the phone calls are huge, saying, hey, we're working in this market. It looks like we're going to have some deals coming up. Just letting them know, the kind of deal it is, what we're looking for. And I think in this market right now, it's focusing on stability, really, good loan terms, and just a good stable asset with good value add. I think a lot of people are nervous about the banking and they're nervous about the economy. And so having a deal that's got a good tenant base, maybe some real reliable income, cash flow is absolutely huge. And so we talk about that with all our investors, make sure they know that that's what we're looking at on every deal. And we say, hey, we're going to have one of these coming up, so be ready, that sort of thing. That's really what we look for, just to keep them engaged.
Yeah, it's really, really important. I'd met some investors at an event, and we have deal flow happening at Three Keys, and so it's like, oh, bummer, they're not going to make this deal because they just invested in someone else's, offering, and so it's a matter of that timing and just letting your investors know, hey, we have something coming up. So, conscious investor, for you, that's one really important thing, right? Step one, always make sure that you are connected with people, companies, operators that you believe are aligned with your values. Because if you're aligned with your values, you will feel more comfortable, more represented. And then you will be on their distribution list. You're not going to be, like I would say, hey, you missed the deal because you're not on the investor list for Three Keys Investments. Same thing for Colby at, Mountain Bridge Capital. If you're not on the list with 506B offerings, you're not going to even know that there was a deal. You're not going to get that heads up that there's something coming down the pipe.
That's right. That's the beauty of a 506C. You can go out to everybody and do that. We're working towards that, but we're not quite there yet.
What would lead you into a 506, your company into a 506C offering?
Yeah. So that's definitely where you want to be, have a more of a social media presence and really have that niche kind of nailed down. And so, with the 506B, of course, it's family and friends, and you can bring them in. But you can also bring in high net worth investors. So it's kind of a good mix. And that's why we like it, because we have a lot of those relationships that we've built that we want to continue bringing into those deals. But over time, I think the challenge is trying to get more and more people that are accredited investors, meaning they have that net worth and they have that liquidity to come into the deals. So that's kind of what we're looking for.
All right, conscious investor, this is a reality right here for you. So point number 2 here that I'm just going to throw out there is that oftentimes, like, as companies are growing and maturing, they're growing and maturing with their minimum investment amount. They're growing and maturing with the sophistication of their investment package. And so when you hop on board and you align with different teams early on, you're going to have more opportunity. So like with that 506B, if you're not accredited, you can be involved in that. But the moment Mountain Bridge Capital goes into a 506C offering, you're no longer going to get into their offerings. You're going to have to sit those out and be on the sidelines. But if you're in those 506B offerings and you're growing with them, your net worth is growing with, right? So I know you follow along with this, conscious investor. You don't want to be on the sidelines. You want to be active, engaged, investing so that net worth is growing. And if you're doing that alongside a company as they're growing, you're going to be, reach those little thresholds so that you can be accredited and participate in their investments.
Yep, absolutely.
Yeah, that's really key. That's really key. I have to throw out, we made a fierce decision to only offer 506B investments at Three Keys.
Okay.
It's an interesting decision, but we had a 506C last year, and we had a lot of sophisticated investors on the sidelines that were disappointed. And so we're like, our heart and our mission and vision is to serve all investors. So it's a little bit gutsy and conscious investor. That means that we really need your support. Credit investors can come play in the sandbox, but it really opens that door. Have you ever considered running a parallel? So we've considered transitioning from a B into a C at some point.
Yeah, we looked at that on our Las Cruces property. We thought about doing that. And we went ahead and stuck with the 506B because that seemed to be mostly who our investors were.
Yeah.
And switching that, I think would have brought in a lot of complications and probably wouldn't have worked out too well for that particular deal. But I've heard of people being very, very successful at it, starting with the 506B and then transitioning to that. I think that's something we would look at into the future for sure.
Yeah. It's amazing the options that are out there and even how some of the interpretation and some of the regulations have been, people are looking at them in a little bit different way. So always have to be cautious, make sure you're doing.
Yeah. And I know there's a cost in there too, getting you with your syndication attorney. Once you switch over, you've got a lot of extra. And I think that was part of the thing too, was when we did that, we were going to have to change the whole offering, the PPM, everything. And depending on your timing, that makes it real challenging.
So let me ask you this. I know that we have some criteria at Three Keys Investments for our investors who we're bringing in. What are some of the things that you are looking, because we're trying to build a culture. We attract a particular type of investor who really wants to impact the world while growing their wealth. Like, what's part of the culture at Mountain Bridge Capital? What are some of the things what are the types of investors that you're trying to attract into your community?
Yeah. So, basically it's a lot of family and friends. That's what we look for. People we have really good relationships with, people that have some sort of interest in real estate or business, or they're passionate about the retirement or just learning. A big part of what we do with our meetup and our kind of our newsletter and our educational format is just letting people know what's out there, educating them, telling them, hey, there's this thing other than the stock market that you can invest in. And it's pretty dang stable. It doesn't have a lot of the volatility and the craziness that you deal with day to day. And then also, trying to gear it both ways, because you have people that want to be passive, you have people that want to be active, and letting them know, hey, you can be active. Here's how you do it. And we'd be glad to share everything we're doing and let you know and kind of guide you on the way. So I kind of see both sides. And I think it's just awesome to be able to help people out regardless of which way they're going. And it doesn't have to be one or the other. They can do both, which is beautiful, especially if they have some capital. They can invest passively. They can also be learning as they're investing, or they can, we do some JV deals, smaller deals, where they can come in and participate with us. So that's the amazing thing about multifamily is just so many ways you can do it.
Yes. Responded to an email to an investor today, just about, this is why we love real estate. I mean, there are just so many options out there. It's really only limited by your creativity.
Yes. That's absolutely right. But yeah, back to your main question of who it is. I mean, it's just, I think it comes down to people that really want to help themselves in some way. They're looking for something. They need some guidance, and that's kind of who we look for.
It's so nice. Conscious investor, isn't that great? So that's something that you're looking for. Maybe a third point here when you're looking at passive investments, right? Is this team going to support me in my own growth, my own personal growth as an investor? Are they going to help educate me so that I can expand all of what I am doing in the investment space? Because maybe you're starting out with, I really don't understand it, but I know enough to get started. And now if I'm aligned with a team that wants to educate me, I can do even more. That's really, really powerful.
Yeah.
So you and I were talking off air a little bit also just about some of the things you look for, like as you're pursuing, potential like LP opportunities and such. Like, what are some of the things that you are looking for in those deals that come through your inbox?
Yeah, obviously, operator that's been through it, experience, they've got the track record. They've been full cycle on a deal, which means they've bought it, they've sold it, maybe refinanced it, but they've done that. But I think more than that, it's just the transparency. Are they responsive? I think that's a huge key factor. Are they keeping their investors informed along the way of what's going on? Are they telling them the good, the bad, the ugly? I mean, for example, I could say on our Las Cruces property, it was a pretty tough haul for our first year, over a year. And one thing that really helped us was just letting people know every month of what was going on.
So you're telling me your this asset you guys acquired, the Las Cruces. Am I saying that right? Correct.
Las Cruces. Yep. It's a town in southern New Mexico. Yeah.
Okay. So you acquired this property, and for the first year you held webinars every month?
We still do. And I think that's really been key for our investors, is just keeping them informed and updated. So it's basically just a Zoom call where they can come in, ask questions. Usually we don't have a whole lot, but it's a couple. But the great thing is, once it's done, we have it recorded, and then that goes out along with the monthly report. And I've heard, and by all means, we're not the best operators. There's much more experience out there, but I think I've heard of a lot of operators not doing that. And that concerns me. Like, if I was going into a deal, I would want to know that they're going to do something like that. I mean, the quarterly newsletter coming out every quarter, that wouldn't be enough for me. And I'm not
heavy lift on the Las Cruces.
It was. Okay. It was pretty brutal for about a year. I think we dropped to 65% occupancy last May or June. And it was a huge challenge. We're up to 90% now, knock on wood. We've made it through it. We're cash flowing. We actually been doing distributions all along, but now our receivables are way down, and it's just what's really saved us is the seller carry note we got. We got a great loan. We didn't do the bridge, which we may have done if we would have done the deal.
A lot of people would have done a bridge with a heavy lift, so that's amazing.
It would have been the only option, and I think we would be real trouble. We would have been in real trouble for a while, but
with interest rates rising,
with the interest rates 9% or whatever they are now, that would have been really tough.
Yeah.
But the loan saved us. And then, one thing we were able to, so most property managers aren't contractors. That's not what they do. I think they have some of that knowledge, and they can do turns here and there. But when it got to that point, we really had to jump in and get 3 or 4 contractors going to turn that thing around. And we were doing 8 to 12 turns a month. And that's really what saved it and got us out of the hole.
Wow.
It was a heck of a learning experience.
Well, and that just takes you into the next project so much stronger. Everything else is going to seem so much easier. And I agree.
Yeah. And that knowledge of knowing, what to kind of look for now. What investors want.
Right. I always think, the first couple of deals, I would always say, oh, the deal's going to close. And I basically had this is the day it's going to close. And I didn't quickly, because it took me the first 2 deals to realize these timelines are very fluid. Lots of things can happen. Our projected close might be June 15th, but we might not close until June 23rd. Things happen, right? Because these are such huge assets. One thing we're in the process of ground up development right now. And that is something every month we send out a newsletter that really
Yeah,
chronicles
that's key.
exactly what's taking place, the good, the bad, the ugly, because there are setbacks, there are gains, there are so many moving parts. We want the investors informed. However, on our stabilized assets, we do send out quarterlies because we're like, there isn't any.
Not too much to talk about, I guess. Huh?
Not much to talk about. And
That makes sense.
I have to say, I do appreciate having that much to talk about. I love it when things are,
No news is good news, right?
up. But yeah, exactly.
Yeah.
Oh, wow.
Yep. That's a good point. I think we're probably heading there relatively quickly. We might still do the monthly. I don't know. We haven't decided.
Well, it's part of culture, and we've definitely considered doing just a monthly investor get together. So that's really cool. That is really cool. So you're looking at when you're evaluating all the deals, because you and I both have, and Conscious Investor, you might be at this point too, where I just have all these deals in the inbox, and it's like, how do I even know where to start? Like, there are so many opportunities out there. So you're like, hey, I want to know what somebody's experience is. I want to know what their track record is. And when you're evaluating the deal,
Mm-hmm.
and when you're looking through some of those offerings that come through the inbox, what would allow something to kind of stand apart for you to say, okay, I want to look into this one more?
Yeah, I think right now, probably the debt, the assumable is probably the first one, or maybe a seller carry. But there's agency, which is good. The leverage, that's the issue right now, is the leverage on these deals. Agencies, 45% right now. And so the deal has to be really good to make that work. And so with the assumables, there's got to be plenty of runway left. So the leverage has to be good there too, even though the interest, that's kind of what I found really is it's the leverage that's, everybody talks about the interest rate. The interest rate's important, but what about that down payment? That's critical. And that's what's killing a lot of the deals. I feel personally, the interest rate's part of that, but it's the leverage. So we look at that, and then we're also looking for value add. How much value add is there to make these deals work with the leverage, with the interest rates? Got to have a lot of room to get those rents up. There's got to be other income. Got to be able to drive that income. So I think those are the keys that we're looking for going in to try to, yeah, like you said, it's a real challenge. Because there is a lot of deals coming right now. A lot of deals.
I don't know that they're all good. I just know that
I have not found very many that are good.
I'm like,
but yeah, it is a huge challenge. So having a way to weed through those and try to pick out which ones you can start with is really the challenge right now. So
yeah,
I know.
Are there any asset classes? I mean, you are definitely in the value add multifamily space. Are there any asset classes that you'd be like, I'd be interested in that asset class, or I would want nothing to do with that asset class? Like either side of the pendulum.
Like outside of multifamily?
Yep.
Yeah, we've done some single family. That's how we got started. So definitely still interested there. Office, yeah, probably not office right now. That seems to be a really tough space. Industrial, I think, has some promise. I've heard of some good things there. And then mobile home parks, we've thought about that as well.
Yeah.
But really, I think for us, it's just maintaining that focus. I think the shiny penny syndrome always comes into play. Start looking at those things, and it's like, no, just got to stay in my lane, because this is what we know, and we don't want to venture too far out of that right now. Maybe at some point in the future when we get more established, but right now we want to maintain our multifamily focus.
Once you go through a Las Cruces situation, it's like, well, we really know what we're doing here. Let's just stay in this
Yeah.
lane.
Yeah. I think it's been a huge confidence boost for us going through that. We feel like we could take on something like that again. I guess the flip side of that is, what do investors want? And that's really what we have to focus on right now. Because I think at that time, investors were they were really flexible. And this was 2020. Everybody was investing in everything. And so it made it an easier sell at that point. But now, I think people are wanting more stability. They want nicer quality assets. And so I think it would be a real tough deal to go through that again. I'm not sure we want to do that.
A little PTSD on that one.
Yeah. We absolutely could do it. And we're looking at some deals like that, but I think for our investors, I don't think that would be something they would want.
Yeah. It's interesting. We've made a commitment, aside from 506B offerings, but to just simply stay in a place that provides residences for humans. So we're in multifamily and we're in assisted living, and there are other asset classes that are so like shiny object, but like, we want to stay in something very specific. Like you're saying, okay, we're going to stay in this lane and we're going to be so good at it. And that's what we're going to do. Yeah, that's awesome. And assisted living is a good one too, that we thought about, and it's very similar. So I could see where that would be a real good fit. Yeah. I'm a huge fan of the assisted living space, especially as we're venturing further down into that asset class. It's like, oh, this is so powerful. And like, we get to powerful returns for investors, super, like just amazing returns, but also doing something so powerful. It's a really cool story that you can tell on those for sure. Yeah. It's really neat. Goodness. And being able to pivot, that's huge too, right? I mean, with the market the way it is, I think that's something we all need to think about is, multifamilies, there's a lot of deals, but there's not a lot of deals being done. So at some point when, making that pivot, that's critical. Or not a lot of good deals necessarily. That's right. Not a lot of good deals out there. They're not penciling. I have spoken with some friends that have assumed some loans recently because people are getting close to defaulting and such. And they're like, yep, we were able to pick this up. So there's some interesting opportunities on the horizon in the multifamily space. Yes, it's come. I think there's going to be some more coming for sure. Yeah, definitely. Looking forward to that. Yeah, lots of fun. Colby, it's been so fantastic. I cannot believe how fast the time, every time Conscious Investor, you listen all the time. Every time I'm like, where did the time go? Colby, is there anything else you'd like to add to the conversation? No, I just really appreciate you having me on. This is awesome. Awesome forum. And honestly, just a blessing. Thank you so much. Yeah. If people want to reach me, we're at colby@mountainbridgecapital.com. That's our email. We're on Facebook, LinkedIn. We do have an ebook on our website. So there's a point to where you have all the information you need. And for transformation to take place, you must take action. So go pick up the ebook, on the Mountain Bridge Capital website, read it, understand it, and then take action, because you don't know what's up the block and around the corner unless you actually take a step towards the block, the end of the street, right? And so you can pivot at that point, but you have to be taking action. So please make sure you do that. Conscious Investor, it has been awesome having you on the show, joining us once again. And I want to encourage you, if you have not already connected, what are you waiting for? It's really funny. I had one of you Conscious Investors came over to the 3 Keys Investments website. You joined our investor club, and it showed up in my inbox. I made this phone call. I'm just giving you a shout out. You know who you are. Make this phone call. And he's like, no way. I'm literally listening to your podcast right now. And I'm like, and then by the end, he's like, you're the same on the podcast as you are on the phone call. So I just want to encourage you. There isn't a distance. The only distance between you and I, Conscious Investor, is I can't reach out to you because I don't know who you are unless you reach out to me. So please make sure you go in the show notes, schedule a time for us to talk, join the investor club so that you know the deals that are coming up and so that we can support you in making your first or next step. Until next time, have a great day, and conscious investor, live big, love bigger, and do great things.
What's the big deal about investing in apartments? Why is it better than investing in a slew of single-family homes? I've compiled a lot of information on why investing in a multifamily, also known as apartments, will help you reach your investment goals. Head over to 3keysinvestments.com and download the Why Invest in Multifamily guide today.